Okay, welcome to this episode of the WT3 podcast, the podcast where we tell you, emerging technology founders, how to build your businesses from 0 to 1. Today, we're walking through the intricacies of valuing your company and products and maximizing your startup's valuation with Teknos' Neil Thakur. So a little brief bio about Neil. So co-founder and managing director of Teknos Associates and head of their cryptocurrency and blockchain practice. As a Yale alumnus with a certified valuation analyst designation, Neil is a pioneer in the valuation of digital assets and has spearheaded numerous high-stakes valuations across tech and life sciences sectors. He's a recognized industry leader, having been named a 40 under 40 honoree by the NACVA. Neil, thank you for being here with us today. Much appreciated.
Thanks for having me, and thanks for the kind words. Much appreciated.
You're more than welcome. You're more than welcome.
So Neil, like, you know, it's a super interesting piece of industry that you're sitting in. I think from the traditional perspective, it's very important. From the Web3 perspective, is I think often overlooked. But how did you get started? How did you come to this point where you said, like, Web3 needs this? Like, how did you set up this whole division at Teknos?
It's a great question, and like many things in call it emerging tech, it's almost by accident. We as a firm, we've been around for a while, for about 15 years, and maybe around 10 years ago, actually even before that, I actually got a call from a very well-known VC that's well known in the space now, but at the time was just kind of starting out in the space. They had about 10 to 13 kind of investments, and they reached out to us because we do a lot of valuation portfolio work. And so they said, hey, listen, we've got these, we wouldn't call them Web3 startups at the time, but call it blockchain related types of companies, and we need help valuing them. And we had a quick conversation about it, and I was very intrigued by it. We didn't end up moving forward with them at that time. But then fast forward maybe a couple of years later, when we really got into the space, we got a call from some folks over at Ripple, actually. And it was weird because they said that, well, we've got this XRP, it's locked up with a market maker. We're trying to figure out how to price it. Do you guys have any interest in trying to take a stab at it? And we literally said, okay, yeah, we'll give it a shot. And we came up with this kind of weird lockup mechanism valuation, concept. And literally from that kind of exposure, we started getting calls from other guys in the space that heard about us doing this. And, the use case was a little bit different. They were starting a new project. There was a token component to it. They need to understand how to value that for different purposes. A lot of times it was either maybe compensation or it was part of a transaction. Mm-hmm. And they said, hey, can you help us out with that? And there are some very well-known projects in this space now. But at the time they were kind of 4 or 5 guys in a room. And, that's kind of where it took off. And there's a whole kind of cycle of, should we be doing this like full time, or, where is this going to go? And we went through that kind of educational process internally where it was, all right, we've got this mass supply of, companies that have come in, needed this. And then, market tanked, then it kind of went away, and then it came back multiple times. I feel like we've seen cycles in this industry that we see in traditional equities, in the last 10 years that we see in traditional equities that we see in 50 years, right? 100 years, right? All compressed. So anyway, that's a little bit of how we got into the space. And then I would say maybe probably about 5 years ago, we said, let's, devote an entire group to this. And I spent my time kind of going back and forth between industries. But at this point we said, hey, we're all in, and, let's devote all of our, at least my time and a few folks in our group. We're going to do this long term, and here we are. So yeah, it's kind of a wild ride, just a random call here and there, got us into it. But anyway, that's a little bit about that.
And the interesting thing I think about this is, if you look at Ripple, you hear all the stories about Ripple, right? I think there's a lot of things known about Ripple, and But I think these kind of things, they're being often overlooked because they're not sexy, right? They're just like part of I think the boring piece of what blockchain is. So it doesn't often also, I don't think, get the spotlight on it. So hearing this, super, super interesting that, you were the guys that actually helped them take the next level step, right?
Yeah, for sure. That's exactly right. It was kind of, that relationship in of itself, validated a lot of what we do when, a lot of people were just afraid to touch this stuff, right? It was, this is stuff they hear about Bitcoin at the time, and this is mostly kind of utilized in nefarious ways. And so, here we are.
The Silk Road days.
Yeah, for sure.
Yeah.
What was the price of that pizza? Like now $10 million or something crazy?
We've had that discussion several times.
Yeah, but that's the interesting thing, and I think partially as well with that these cycles where you see the business come and go. You're like, should we really do this? Should we? And then there is that point, I think, where you're just like, okay, now it becomes, now we have an actual shot at the actual opportunity, and we can do it right because we've done so many of these cycles already.
Yeah.
And here you are. Well, absolutely amazing. It's not often that we hear or that we talk to people that sit like, behind the curtains and, orchestrate these kind of pieces. So that's, once again, like super, super cool to hear that. And then what pops up in my head is like, what are the challenges? Because like, so you went back and forth between traditional and Web3, but, I just you took a first stab at it. Like, how different was it? Like, maybe, I don't think we can talk specifically about Ripple, but how different are the frameworks, or were the frameworks back then and now between traditional and Web3? And was there a lot of challenging moments where you're like, okay, we don't know how to solve this, or we just kind of go with this?
Yeah, excellent question. And a lot of different components to that. There's the valuing of the company, and then there's the valuing of potentially an asset like a token that is different, right? And they can work together, right, at some level, but at different stages they have kind of different values and different interpretations of value. And so, when we look at a Web3 company that maybe has a token project, and actually this kind of depends on the stages over the last kind of 10 years, right? There were very different things in the early days where it was just like, it's very similar to like when companies were going public in the early 2000s, right? Everyone was, it was just like, we had a .com address and we're just going to go public. And it happened a couple of months. And then there's like a graveyard of like all these companies that occurred afterwards. And I think there was a lot of kind of thought that that's what this was again. But obviously, things are different with what you're talking about, this specific asset class, which is what has been created, right? We hadn't seen a new asset class like this kind of exist in a long time. And so, one of the big challenges was trying to understand, how to value the company, and then how does that token fit into it? And a lot of times it kind of started with the token of itself. So a lot of people, when they came to us, it was, try to understand the valuation related to the token. And what we would have to do, and what we still try to do, is, try to utilize the existing kind of frameworks, but just modify them a bit. So there's, the concept of really at the end of the day, kind of market participants, right? Which we try to start out with everything. And then you work your way down the channel, right? Is there a way to develop some sort of income model? Candidly, they're using like what we call kind of a discounted cash flow approach doesn't really apply to a lot of this stuff. It's really hard to kind of forecast, utilization and adoption and growth in these unique kind of systems, because every one of them is like its own kind of system in of in itself, right? And so you've never seen kind of that, call it type of, I'll use the word currency, but it's not always applicable, but you've never seen that exist, and you don't know how it's going to be adopted across time, right? And so we had to think about it in terms of what are the right kind of methodologies to put here, and have there been transactions in this space? Can we look at those to kind of get to a value for the token in of itself? And then same thing on the equity side, right? A lot of times you could argue that there are these capital raises for the company, right, on the equity side. And you can look at that as kind of a primer for the value, and maybe the token in of itself is kind of priced in there. So we had to think about, the relationship between the two, and try to figure out kind of the best ways to apply it. But it's very different than saying, hey, I'm just going to look at, comps from, Facebook, right? And, companies like that who are already out there, and we can draw, price to earnings multiples, stuff like that. Like, doesn't apply here, right? In the same kind of methodology kind of concepts, right? So you have to kind of break that apart a little bit and then figure out how the two kind of work together. But yeah, and I could bore you guys all day long with the intricacies of that, but we can save that for another time. But yeah, at the high level, yeah, trying to understand how to apply kind of existing methodologies in this new context was the biggest challenge, and continues to be, right, as these networks kind of evolve.
Yeah, I mean the variability, the way in which tokens work, and how I was talking to Liam on the After Dark yesterday about what are the most interesting token launches, and the way people are launching with like auction methodologies, or just stating at the level of staking. The DeFi stuff that's going on right now.
Yeah, the restaking, all of that stuff. Yeah,
restaking stuff. You've got your job cut out for you with just catching up with what these guys are doing, if not being ahead of it. But I mean, enough about the too much professional stuff. I want to hear about yourself, Neil. Like, how did you get into this? How do you get into valuation? Like, I'm the marketing business guy. I want to know about the people. I like people's stories. How did Neil graduate in uni go, you know what? I'm gonna learn what companies are worth.
The background is boring in a sense that once I left college, I kind of joined the crew of folks who you either go into management consulting or investment banking, right? And I took the investment banking path.
Hey, we are bad people. What do you?
Hey, look, I've nothing wrong with that. I'm just saying that, like, when we were graduating, and now I'm dating myself. There was, unless you were at like Stanford or something like that, where it's really kind of focused on, the startup community. New York and was kind of where you had to be for most of this stuff for a lot of the folks that I went to school with. And so that was kind of, I started off in the investment banking world, and then from there, like, I always had an interest in finance, right? And so that was just naturally what kind of drew me through like a lot of this stuff. And then I moved back to the West Coast. I'm originally from Los Angeles, so I moved back to the West Coast. Actually got a job in valuation for a specific type of valuation. It was actually something focused more on litigation for early stage small businesses, that kind of thing. And then from there, I got back into banking briefly. So this is actually it's a tale of the .com world, but
give us the juicy detail.
I bounced back. Yeah.
It's not that boring, Neil. It's absolutely not that boring.
Not boring at all. If we can learn from that,
it's just hysterical when I think about it at the time, but was frightening. Why the world of investment banking is frightening for folks, especially at early stages of career, actually all parts of your career.
It's terrible.
So I jumped into the investment bank, back into the investment banking world, actually with a company called ABN AMRO. That's a Dutch bank, pretty well out there, I think, especially for you guys. They had a very strong commercial banking side out here in the U.S. For a lot of tech related companies, and they were trying to leverage that concept into the investment banking world. And the investment banking world is very, very different than commercial banking. Obviously, the economics are different. It's a very different type of, I think, skill set from the bankers that are involved in that. And so they were trying to get into there and trying to leverage their contacts on the commercial side. And so this is right around 2000, end of 2000. Into 2001. So, if you think about what was going on around that time, everything from politically to kind of the startup craze kind of winding down. we were, spending time kind of trying to chase deals and everything. And then, we moved forward into just like the .com kind of bust. And then we had September 11th. Obviously, that affected a lot of things. And then just you get into October and November of 2001. All of a sudden, I start hearing stories from my friends like on the street who were like at, again, dating myself, companies like Merrill and Goldman and some of the other well-known investment banking brothers. Yeah, I mean, who knew? So they're like, "Oh man, I just got canned," and I was like, "What?" And they're like, "Yeah, they let our group go," and like, a lot of analysts and associates were getting, and then we're like, "Oh, we're fine. It's European bank. There's they have a long-term interest in sticking this out," and then we started to hear a little bit of whispers about things, and then we all got called into a conference room one day. And this is everyone
management consultants in.
Yeah. Oh, yeah. It was like, you're like, So there's about 25 of us. There's the MDs down to the analysts, and we're all in there. And some guy comes in from London, and he hits the speakerphone. And there's this guy from, I think he's calling in from Amsterdam, and he's like, "Hey, listen, guys, it's been a good run, but we have some situations that we have to deal with, and the group is going to be dissolved, and you guys are all going to be let go." So we were let go via conference call, the entire group. So all over, like at one point, just one period of time. And so, that was, that's my investment banking kind of horror story of, things can be great, but in tech specifically, it was a bloodbath, like for everything. And so, that was my kind of foray back into that world. And then, after that, I jumped back into valuation for a bit, and then moved into another actually European-based company called Grosvenor. They do investment in real estate. And amongst other things. And so I spent some time there. And then after that, I jumped over to, what is now, I think, a part of Duff & Phelps and Kroll, a company called Page Mill Partners. And that's a boutique investment bank. And I spent some time there. And then while I was there, one of the partners over there said, "Hey, listen," and literally I was there for about 6 months. And he said, "We're thinking about spinning off and start our own thing." And I was like, "Wow, what's out here? Like, what are we doing here?" And he's like, "Well, let's carve out, there's the valuation kind of sector component, which, combined with some investment banking concepts that we're going to try to spit out and focus in on versus just running traditional deals." And that meant there's a lot of tax, financial reporting, and then valuations around fairness opinions, IP, all that, but really focus on the valuation side of things. But it's focused on emerging growth tech. And so we said, "Hey, all right, I'm in." And so that was kind of the beginning of that. That was back in 2008. And, here we are still doing it for folks. But yeah, that's a little bit about my journey, going through just like the pitfalls of, being young and, just kind of going through that process. But I certainly learned a lot through that. And it certainly helped me try to better understand a lot of the companies that we work with. And, that it's cliche, but that resilience and that hustle certainly matters when you're doing this in the context of, starting a new company, right? Because we've seen a lot of things going back over the last 20 to 25 years. And, history does repeat itself in different ways. It just kind of gets modified a bit, but, we can still kind of think about, how this stuff applies in the modern day. So anyway, hopefully that was somewhat interesting.
Well,
actually, it's a startup journey, right?
That's one thing. And it also makes a lot of sense because I wanted to ask you, it's like, how do you, because what is your rabbit hole Web3, right? Because everybody has their aha moment. I call it the rabbit hole. You're like, oh, but you seem drawn to these kind of things, right? Like if you look a little bit at your career, the Web3 fits in there, like almost, it's like was a missing piece.
Yeah. The Web3 component is interesting because, in the early part of just the call it kind of the blockchain phase of things. It was, let's just get a token out. There wasn't a lot of use case. There were a handful of projects, and we've been lucky enough. I think because we got in so early, because we knew a lot of the players in the space, the people that we were working with all understanding kind of the long view towards it. So, we traditionally didn't have a lot of projects, and still don't, that come to us and say, hey, we're just getting some kind of, meme coin out there, where we're doing a token sale. And then once it goes, like, it's just going to pump and dump, right? That kind of stuff. That we didn't get exposed to a lot of that. In the early days, it was, while that was the case for a lot of the tokens that were hitting the market, the projects that came to us were trying to put together kind of real use cases around, the traditional Web2 ideas, but kind of layer on this blockchain technology, right? Which is very powerful. I think that really was the hook for me around the concept of, the blockchain in of itself, right? And what it represents, the decentralization of things, and how you're moving from, a controlled environment like, the traditional kind of big companies out there that we all know of, to kind of a different concept where, hey, listen, I am going to try to actually own and monetize my own data in a certain way where, like, it's managed and I can, monetize it in a certain way versus someone else controlling that. And that concept in of itself, I think, was incredibly powerful for me to kind of get my head around. And so, it's still something that I find myself explaining to folks who are like, a lot of my counterparts are, they're in private equity and traditional finance, right? And they're like, dude, what are you doing? Like, what is that, right? Because we're talking about it in our context, right? And we're such a small, like, sliver still of the capitalization of the entire, like, world of finance and just business in general, right? This is still very niche, even though there's a lot of drama around it publicly. But we're still
it's noisy, but it's small. Yeah.
Exactly. That's exactly right. And so, trying to explain that type of concept of, no, this is not just some sort of scam. This is actually, you don't even know it, but the underlying technology is actually running in financial institutions, right? Like, the concept of validation and verification on a decentralized network is so powerful, right? If I can validate certain things at, for everything from provenance to other types of transactions at this level, and it is understood and validated to a certain way where someone can track it forever, that's fairly important. So, that was kind of my moment a few years back, where once, I got my head around what that concept really meant, where I said, hey, listen, I think this is something that we really should focus in on. And so, that's how I came to be here.
That's a big dip. That's a big decision to make. And I, when you were saying this, like, I think all of us have, because I come from traditional Web2 tech, and Charlie comes also from traditional Web2 BizOps. And then at some point, you realize that you're becoming the degen in the room, right? Like, if all the Web2 people, they're like, what are you doing? Why are you doing? Because it's great. And that's that rabbit hole moment, right? Like, where you're like, oh, this is why it's so great. And let me explain to you. And they're like, oh, you must be fond of parties.
For sure.
I even had, I think this is like before the last bull run. I was talking to my cousin, and she was like, so you don't earn a commission out of this? I was like, no, Mel. No, I'm just saying buy some.
No.
Yeah, buy some, you'll make some money. I was like, I don't own the company, no.
Love it.
But like people do still, even today, think it's a scam.
Yeah. And look, we've had our moments, right?
Absolutely.
And, there's I'll use that term lightly, but there are certain actors in this space. But you could also argue that, I mean, if I compare that to what happens in traditional finance, I mean, give me a break. There's the reason why there are regulatory bodies that exist and follow that. And the amount of fraud that goes down in that industry, the traditional is significantly higher than this. But I understand the concern around a new asset class like this, something that can grow fairly quickly in the right construct. And so, naturally, there are other bodies of government here and around the world that are always trying to better understand and manage potential concerns around that. So, I do understand that too.
Fair. All right. So I think at this point, we're going to move on to the advice for startup founders. We've got your 10 questions here. Kicking off with valuation fundamentals. This is community driven. Community has asked us, what do I have to do to ensure that I get to a Series A? And if Teknos looks at us, they like us. Again, I think I draw that kind of comparison with Adam, our editor, who's sitting in the back here. You don't want to screw the guy that's telling you that's going to like make you look good, both financially and on the video stuff, right? Like,
for sure,
don't do it.
That's right? The last person you need to upset.
Yeah,
Neil's got to have a lot of new friends after this podcast.
But yeah, no. So valuation fundamentals. What?
Yeah.
When you're looking at a company, and bear in mind, like as practical as we can, what are the primary factors that influence the valuation of a tech startup?
Yeah, it's a good question.
Particularly emerging tech in the Web3 sectors for us here.
Yeah, I think this has kind of evolved over time, and it continues to evolve. But I kind of made reference to it earlier on. But the companies that we work with that we find to be successful have a real use case, right? There's a very specific case for the market need around what they're building, right? And now in the Web3 space, it's a little bit different because, we don't see traditional, call it revenue models, but you still can, right? I mean, you look at a company like, like an exchange or like a Uniswap or something like that, where there are traditional kind of revenue metrics there at some level, but they also have a token component, right? Mm-hmm. And so, when we talk to companies, outside of someone just having, a meme coin, what we look at for the most part is first understanding that there's a real kind of market need for this, and there's a real use case that you're building around, right? That's one of the most important understandings that we need to figure out, when someone's putting something together. Because if you're just kind of, out there trying to put something random and trying to make money quick, there's not like a long-term use case to building a business, right? And if you're building a business, you want that strong use case that has been validated at some level through like your research into the market, right? And so that means from there, diving into, what's the market size and growth potential for what you're putting together. And in many ways, in that sense, it's very similar to any other kind of emerging growth, kind of Web2 kind of concept, right? But we're kind of marrying that with the concept of, putting things in a decentralized kind of capacity. Maybe you'll have a token. You don't have to have a token. That's the other thing. If we're talking about Web3, you don't necessarily need a token. So if you're putting this together, you're making sure there's a use case for what you're putting together. And then you got to ask yourself, do I actually need a token? Is that incentivization structure something that's necessary for this? Or am I building something that's more kind of, infrastructure based, right? Like tools, like picks and shovels and tools, that kind of thing, where you're going to support the existing ecosystems. So, when I look at it, like in terms of the things that, I really care about, it's that kind of use case. It's understanding the potential market size and growth potential. And we're at a point where, as opposed to call it 10 years ago, where, there weren't other tokens out there. There weren't other Web3 types of companies that I could look to necessarily. I mean, I brought up Ripple, but that's just one kind of, call it success story at that time. But, if I looked at, the tokens that were trading out there, and there are no public companies, right? It was before really Coinbase, right? Mm-hmm. So you couldn't get your arms around what that meant. So now though, we have, there's a few public companies out there. There's there's a ton of token projects, right, that we can look to as success stories, like a Chainlink, right, like a Solana, like companies like that. Or we can look at and say, hey, how does this fit into these types of ecosystems? Market sizing compared to that, how do we compare to that? So those are all things that we care about. In addition to that, I would also say the team and expertise, right? This, again, similar to the Web2 space and just traditional stuff, but in addition, right, it's guys who you want to surround yourself with as many folks in the industry, right, as possible who have a knowledge base around this, right? Mm-hmm. And so it's one thing to talk to people who have started like an e-commerce company, right? Or just and there's nothing wrong with that. It's just that if they haven't been in the space yet and don't understand the particular mechanics that are involved around it, then, I think you're going to struggle a bit, right? Because how do you marry kind of the product and the technology all with all of this stuff at the same time without not really doing your diligence and talking to people who have experienced this firsthand? And I think, that part of it can't go kind of overlooked in this process, right? Exposure to the right people so they can understand the product technology, how traction adoption works. And then, biggest part of this is really in the Web3, just the concept of like, and you guys talked about this, like in some level, like the network effect of things, just in general, like no more like industry is this more kind of prevalent than, the Web3, because that concept of community building, right? And building out a network is incredibly important for what we put together here. And if I'm starting a company, so, you're just kind of, rehashing some of this, understanding market size, growth potential, team and expertise, product and technology, talking to the right people to understand traction and adoption and the potential network effects. Those are the things that I would really hone in on. And some of it is a little bit esoteric, but it really comes down to, communicating and talking to the right people in the space. And, I think there's a lot of transparency in this industry, more so than the typical kind of VC startups kind of world where, and that's the other thing, like, going to raise money and all of that, right? It's always been kind of owned by certain VCs and other folks in the space. And now, while you still have VCs very much involved in it, the ability to get out there and actually talk to people and get information about how this works, I think has never been easier, right? There's no like, oh, okay, I feel like I'm in the dark about something, because you actually do have access to this, right? It is, I can go to a bunch of user groups, Discord channels, et cetera, to start and just get the right information from people. And then you'll be surprised how many people you might know who understand kind of exactly the thing is that you're trying to put together. So those are a few of the things that I think are really important if I'm thinking about starting up a potential Web3 venture.
Is there a particular methodology around valuation that you go for, specifically early stage startups, and how might they practically align to those to ensure that they're, when they hit their next round or their big seed or Series A, especially in the Web3 levels of growth, that they've done the right things?
Yeah, it's a great question. And some of it has to do with, the underlying, concept that we talked about before of, understanding your use case. But, for the most part now versus where we were again, 10 years ago, there are, call it market comparables that you can always start with, right? And work your way back, right? I'm not going to say I'm going to be worth, the total value locked of, what eigenlayer is today, right? Right off the bat. But I could say, okay, look, here's eigenlayer and here's a bunch of other comps that are in the space. And I can work backwards, right? In terms of, that could be the value of the token project. And there's some sort of component that it's built into, what the value of the total company is. A lot of times at early stages, the value of the token, well, for one, doesn't exist yet. So, that sliver of the protocol is very small compared to the overall value of the company, which usually comes into being like, call it the IP, the network know-how, all of that kind of stuff is where the value of the company is at a very early stages. And if I think about that and I look at kind of where some of these companies were at early stages of their financing, that's a way to kind of look at what my company could be worth. And then, you can look at what the token could be worth in the future, but, there's a huge discount that gets applied to that, right? It's just naturally like what gets applied, but that's kind of the interrelationship between the two. But for the most part, it is still very market driven, right? But again, I think we all have more access to that type of information than we had before, because a lot of these projects are very public about, some of their financing rounds and implied values of things. And so you can look at it from the market perspective. If I'm looking at trying to raise and where I am compared to where other projects were at this stage. And so, those are some of the things that I look at. And then in terms of, call it the qualitative factors, we talked about it before, but the strength of, the team that you're coming to put together, the product and the technology that you have. I think understanding that if there is a particular use case and you're building a product around something and the underlying technology, understanding that component of it, and when you're doing evaluation certainly is a key factor that comes into it. And so, again, we look to the market at some level, and then, there's other ways to kind of price things at early stages in terms of understanding, what does it actually cost to put this together, right? And you can work your way back there. And that's a very kind of basic way to look at it, but that's like your kind of, your low kind of, call it tax valuation, if you will, of how to look at something, right? What's the minimum cost it takes to put something like this together? And then you marry that with some of the market factors out there, and then you can come to a conclusion of where, maybe a seed type of round should make sense for you, right? And so that way you understand both sides of the equation when you're negotiating with potential venture investors, right? Because they're going to say, what's the use case? What are the market dynamics to this? Why should this make sense? Well, you should have that compelling story, right? At the end of the day, that narrative actually has not changed in any type of kind of capital raising environment. You still have to have a very compelling story and illustrate that there's proper growth here. So, a couple of things there, I think that makes sense there from a methodology perspective.
It occurred to me that we didn't ask you the straight question. Have you ever valued a meme coin?
Yeah.
and that's how cute the dog is. I
can safely say now we've valued close to we've worked on over 1,000 projects, and we've worked with individual tokens and companies in the space, probably about 400 different ones. And I don't think any of them have actually been a traditional type of meme coin at all. They are all, they're all like either some sort of utility token or governance token, something like that, that are supposed to have, a real use case. Majority of them have, I think most of them are around or still are, and a lot of them are really successful, that have existed in the market. Other folks have, they've had to reinvent themselves, right? And we can get into this in a bit, but, there's certainly use cases where, there's trial and error involved, right? Something that made sense at early stages. But now the token is launched, it exists, but it doesn't have the same adoption, or they didn't manage the tokenomics properly. They're trying to figure out, with, the right folks of either market makers and liquidity providers, how to manage the token in of itself amongst the different entities that own it. And there's a whole host of issues that come around there, but we've seen a fair amount of tokens and projects that struggle with that today as well. So, but no, haven't valued a meme coin as far as I know. I'll have to look back on the list, though. I thought
it was worth a punt. It would be a good story.
Yeah, like
What was this dog coin, you know?
I remember this crazy dog with hat. And Neil, I wanted to really quickly touch upon something that you said that we found from the technology side of things also when it comes to valuation. Like we had often clients coming to us, greenfield projects, and they're like, "Oh, we want to build this." We're like, "Sure," and they're like, "Okay, do you know what it costs?" We're like, "No, we don't, but we'll do a workshop. We'll do research, do a workshop, and after that, we'll give you a report, with the tech stack and narrative and everything involved. And with this, you can go raise." And they were like, "Yeah, I don't think we're gonna need it." I was like, "I think you do." And interestingly, we started like 3 years ago. People, yeah, you know what? They used the report anyway, but it helped them raise for the exact thing that you just said. The minimum evaluation. What does it cost to build this? And then we spoke about POC, MVP, and version 1. Like product version. And we often we got feedback from our clients. They're like, "That document that you gave us was super helpful in explaining the numbers." We're like, "Okay, that's great. It's just a small part. It's a tech part, but it's so valuable." And I wanted to point that out because I think it's often people like, "Oh yeah, we'll just raise a bunch of money and then we'll start building." It's like, yeah, but you don't know how much it costs because you're sitting in an industry that is completely skewed when it comes to technology. It's not a serial entrepreneur comes in Web3 and is again a first-time founder, right? So,
sure.
I think it's a very, very good point. Glad to hear that you guys are looking at that too.
Certainly, that comes across a lot on our side. Trying to understand. Like, if I'm an investor, I do want to know where the capital is going, right? I mean, it seems like a logical kind of concept to ask, right? And so, understanding someone's thought through that process is particularly important. So, I agree.
So to confirm, an orange Lamborghini and a beach party is not a good
what
marketing
really
play.
Look, if it's a marketing focused company, maybe, I don't know. PR based, there's certain needs. So I get it.
All right. So speaking of question 3 here, what are the common pitfalls? Like in your experience, what are the mistakes that startups make that negatively affect their valuation?
Yeah.
And how can these be avoided?
Yeah, this one is, you see a lot of pitfalls that can kind of occur. I mean, at different types of levels. One is, I would say, kind of organizational kind of structuring and understanding the legal and tax implications of things. It's not particularly interesting. And the only reason I bring it up first is it's an area that, just considering what we do, it comes up quite often where someone realizes they didn't do something right, and going back and fixing it can be difficult. But, making sure you're with the right counsel, call it legal on the corporate and tax side, is probably one of the biggest things that you need, because those guys are the gatekeepers to so much, right? And in this space where, now some will argue from the regulatory side that, the rules are there, I don't know what you're talking about. The rules are there. And so, and others might disagree with that concept. And so because of the ambiguity around that, you want to align yourself with the right advisors, particularly on the legal side, legal and tax side, so that, and those guys have to be like focused on this industry, right? Because there are a ton of lawyers out there, there's a ton of tax guys. But you need guys who have done this and do this for a living. And so making sure that you have thought through the concepts of, if I'm going to have a token, what type of token is there? Are there securities issues I have to deal with? If I'm going to issue tokens, are there valuation implications when I transfer those tokens? Can I transfer stuff even if it doesn't exist? If I'm moving stuff over to different jurisdictions, are there IP related issues? How do I set up the entities? If it's a Cayman BVI sub, something like that. Those are all things that you want to think about like upfront, right? You want to make sure that you have conceptualized that and talk to the right people so that you know that if we go down that route, or if you want to go down another path, you've actually had those conversations. Whereas, you start something and then go down a path, and all of a sudden, like I said, you realize that, it's structured incorrectly and there's maybe a tax impact, or I have to unwind things. It's going to be far more expensive to do such things. Those are pitfalls we see happen quite often with folks who are not as kind of experienced in the space, and they're just jumping into this because they heard about it. That's one thing. And, that rolls into a lot of other stuff, I think, in terms of not kind of having a proper understanding of how the company works or how it's going to work. So then you get into the concept of, financial management and ignoring kind of things around, market demand for the project in of itself. Like, you want to try to be, this is a fine line, but you want to try to be as focused in on the use case as you can, right? Now, all startups go through this kind of start and stop. Oh, wait, we're going to try to pivot a little bit. I understand that. But to start with one thing and then jump to another thing and then jump to another thing, that kind of process is something that, I would, to the best that you can, try to avoid, right? I'm all about trying and failing, right? But you got to go all in on something and really devote your resources to that to make sure that it makes sense. And there's a ton of preliminary work that you can do around that, but trying to stay focused, I think, is, while somewhat of an esoteric concept around this, but building towards an objective is a key point here. Whereas, meandering back and forth to different, use cases or types of, products can be detrimental. And as you guys know, when you're building a tech stack, right, and someone else says, hey, well, we want to do this, and then we want to do 5 other things at the same time. We don't understand how they're going to be utilized. That kind of comes into play a fair amount. Right. Yeah. So
been there, done that, end up crying with founders. Yes.
Yeah.
Look, I'm not, I certainly understand that, there's a lot of different directions you can go, but trying to stay as focused as possible on that stuff is certainly very important, because again, if I look at it from the investor's point of view, what they try to do is they try to put you in like, a certain demographic or just a box, if you will, of where's the return on this, candidly.
Exactly.
How do I position you in the market? And that's how they go through their valuation kind of concepts. I want to make sure that my guys are, focused in, and this use case makes a lot of sense. And that's why we're putting our money behind them. This team has got the experience and they are locked into this. So, making sure that you have that focus and you try to stay true to, the initial kind of product concept, at least the theme around it is certainly very important. So, just in general, to recap there, I think tax and regulatory, because it happens to be our area of focus, seems to be something that's incredibly important. And then really kind of focus in on, your particular use case and market. And from that, there's a lot of good things that can happen, right? When you just put your head down, just conceptually, and focus in on it. So, and I guess a third related to that, building in the right, really the right team around you, right? In addition to like your external folks, your internal folks, right? It's one thing to just get a bunch of buddies together and start a company, but it's another thing to make sure that you all have your defined roles, so to speak, right? So you've got the right tech guys, particularly in this space, right? Understanding the underlying concepts around the blockchain technology I guess it's so obvious, but I think it's worth pointing out that you have someone that understands, how this is going to integrate into the overall theme of what you're putting together. Can't be understated as well. So yeah, those are a few of the things that I think in terms of potential pitfalls that, we see a lot of times where people are just trying to just jump into the space because, there's that FOMO effect, right? So yeah, just a few thoughts there.
So, what are the key metrics that you think startup founders should be thinking about with respect to financial metrics, milestones? What are the most important things for assessing a startup's valuation?
Yeah, I think it kind of there's a few different ways to look at it, but let's just take the example of having a token, understanding what we call kind of TVL, right? Total value locked
Yes.
within the protocol. That's a very important metric, hard to kind of pinpoint, but certainly something that you want to think about. If it's like a staking mechanism, call it protocol revenue or staking revenue, right? Trying to model that out. Again, that's kind of correlated to the next metric, which is call it kind of user growth and retention, right? Around the token, like trying to figure that out, at least trying to model it out. Those are all things that we particularly try to understand. And then that equates to, volume and velocity of the token. All these are kind of factors that, while somewhat difficult to understand, but looking at the market and seeing similar types of protocols and how they perform, trying to derive some sort of bands, if you will, of metrics around some of those things, certainly important. So that's, if I'm putting a protocol together, those are all things that, we really want to try to hone in on. As opposed to, again, comparing to Web2, where you might look at a company and say, hey, what's, total price to revenue, right?
Yeah.
Enterprise value to revenue, stuff like that. So those are some of the differences when you're looking at something at the protocol level and how it fits into the overall company.
Brilliant. Okay, number 5, low valuation strategies. How should this is one of those questions that you have to know a little bit to really engage with. Mindful, we're talking startup founders from 0 to 1 here. How should a startup approach the valuation process? And I think this is specifically towards how much you want the company to be worth versus how much you're raising.
I think when someone comes in and puts kind of a mark on you, which is on the lower side than what you were expecting, I think going back and reassessing the value proposition, right, and the market positioning, right? Did you tell that story correctly? Did you pull the right metrics that I just mentioned, right, properly? Is your data right on that, right? And then did you describe that use case properly? I think that reassessment process is something that is fairly critical in understanding. And then, you take a look around and, do I have the right team that I've put together, right? Am I focused in on the right, not only metrics, but the right market, right? Because again, if I'm an investor, if I'm looking at, either, a traditional exit strategy from the company level or what the interest is on the liquidity associated with the token in the specific ecosystem, I want to make sure that, you've thought through those types of concepts fairly detailed, right? At the end of the day. So, I would say that, those are kind of the key areas. If someone came to me and said, hey, you're worth $5 million, but I think, to your point, I feel like I should be worth, 10 to 20. Well, you got to make the use case for that. And the use case is usually data driven. If you can, married with some qualitative factors around, the strength of your team and your overall concept.
Nice. Okay. Number 6, market impact. And this is super variable with Web3 and we know it is, but how, we're talking your TAM, SOM and SAM, the standard, like, how do you calculate your market size, especially in a sector like Web3? I mean, what's your growth potential? How should startup founders go about trying to answer this question? Because I know Thomas and I have seen some decks that have been pretty fantastical.
Yeah.
Can you offer some clarity here?
I at some level, I wish I could. I think related to my last point, it's trying to understand certain metrics, right? And while I don't love the argument around total value locked, it's still something that people point to. And you look at similar tokens in the space. Again, this is for something that's really more token driven. And you look at similar use cases and how companies have progressed over time. I think that market sizing of understanding how the utilization and the growth has worked with some of these companies and the value that's locked on chain is a good starting point, because that's where the venture investors are going to come in at and look at and say, okay, is this something where, we're going to try to grab market share from this, or is this something that's similar? So it can be something like this, but it's its own particular kind of area of focus. So yeah, those are areas that I look at, and it's very industry specific, right? So, right now we're really focusing in on, I've brought up a lot of use cases around, call it, decentralized finance or DeFi. But you can look at like the gaming world, right? And, how that is evolving over time, and talk about an industry which is not gravitated towards the concept of the blockchain, right? And it's a very, very finicky space. I think it's coming back now, and I think educating the space is certainly important. But when I look at the comps in the gaming industry, right? That's a way to kind of market and understand market size and market fit there, particularly. But you can look at traditional gaming companies and see what some of the Web3 types of gaming companies, what they're doing and how they've kind of raised and what their market values look like. So, it is industry specific, and there are some Web2 kind of metrics that you can pull from. But again, once it gets down to the token, understanding the value that's locked in on a lot of these tokens and the potential growth and user retention around it are certainly factors that we would kind of try to hone in on.
So in essence, TVL, like velocity of user growth, and just really being au fait with the market and what they're looking at in terms of potential growth and getting some comparisons.
Yeah, precisely. Right. It's things that seem fairly obvious, but once you try to dive in and actually you spend time with some of these concepts, you can go down a lot of different rabbit holes, but you kind of need to go down that process, right? Just for an informational purpose, and just know that you can say, hey, this doesn't make sense here because we tried this, or we looked at this market concept and it doesn't really apply. But you want to be able to say that you've gone through that process at the end of the day. And
then, of course, defend your assumptions.
Yes, that minor detail, right?
Like be able to defend the assumptions that you're making when you're pitching for capital. All right, number 7, strategic decisions, and this is I think is one of the most nuanced questions that we've got here, but it's really about how strategic choices such as selecting business models or scaling plans impact the valuation from an investor's perspective, because we've got a lot more flexibility than Web2 here.
Yeah. So strategic decisions certainly are an important part of this. Is there a particular area around strategic kind of decisions that you want to focus in? Because there's everything from the technology that you're going to apply, right? Which chain that you're going to build on of, to, call it, corporate and structuring, planning. Those are all kind of strategic decisions. Hiring, right?
Yeah.
Those are all areas of focus which need a lot of attention, right? And just drawing back to kind of some of the things I said earlier, I think the strategy around how you're going to organize the companies, right? Are you going to have a foundation, right? Are you going to have like a governance token? Those type of strategic decisions on where you're going to take the overall business, it can't be underestimated in terms of the importance, right? Because that strategy is certainly important, and that fits into the industry that you're focusing in on, right? So if I'm going to build some sort of restaking, call it network, right? And what am I going to build that on? Do I have the relationships in place, right? Strategic partnerships, all of that is because this is so community driven.
Yeah.
At the end of the day, that if I don't have that in place and I don't focus in on that, the success rate is fairly low, right? It already is low just for anything, right? Just any startup. But if I'm not positioned properly with the right partners in place, which I think is really important, and I probably haven't talked enough about that, but having the right partners in place to help with some of those strategic decisions, and not just on the legal and the tax side, but actually on the overall network, right? Who are the partners are going to help build this out? Depending on what industry you're in, is certainly a very important factor.
Intangible assets. I think this is so. In like traditional accounting, we call this goodwill. I think in Web3, you can pretty much call it a lot of things, but your IP, your brand reputation, size of your community, these are all intangible, but are factored into a startup's valuation.
Yeah, 100%. In fact,
on that, like how much is that worth versus, like we might have a great community, a brand that's really well recognized, but how do you attribute a number to that?
This is an interesting question because there's different ways to look at it. Yeah, to your point, like in the tax and accounting world, there's a very specific way of trying to value this stuff. But in this kind of environment, I would say there's a ton of value in that. Like when you are putting together a Web3 company and you see companies that, raise at, a $5 million raise on a $50 million, post, something like that. All the value really is in the intangible side of it, right? It's all there, right? And then the token in of itself, in theory, at that point, because it doesn't exist yet, right? But it's just the right to this token, the idea around it is a very small portion of that because, you don't know where that's headed. So what someone is really investing in is, the concept that maybe this token will be worth something, but the overall infrastructure and the network and the intangible, the brand, your reputation, your IP, even if it's open source, all of that stuff is where actually a lot of the value is. And so you can make the argument that when we are looking at, total value locked or market comps in general, that value at the early stages of things is all spread out through the intangible asset, call it concept of goodwill, really. It's all there. And then as the project matures and maybe it launches, right? The network launches, maybe you have a token, then the value kind of shifts, right? A lot of it goes in that pie grows, and then the value associated with maybe that token, all of a sudden it becomes a huge piece of that pie. But until that point, right, all the value is in this concept, right, which is the intangible. So when you see those pre and post monies out there, I mean, that's really what they're investing in, right? The idea and the concept that this is going to be something in the future, but at very early stages, it's really more intangible than anything else. And you see that in the traditional world as well, without, the token concept, but, when people are putting in money on something that has no revenue, right? And we see it all the time, right? Like the vast majority of startups, they are a couple of years out from actually having revenue. And so they have to be investing in something, and it's usually that intangible concept where the value kind of exists.
Team influence. You did mention earlier, team is really important towards valuation. I mean, some of these founders are first-time founders. How does a team's background or experience come into play here? And if you haven't got 5 years at McKinsey, what do you put on? How do you demonstrate that value?
Yeah, this is a very interesting concept because it's a depressing concept for someone who's my age. It's because
now we're invested.
I say that because, and this has been happening in the startup world forever, though, right? A couple of kids come out of college or are in college, they come up with this concept because they have an understanding of trying to put the existing, industry on its head, right? And saying, hey, why does it have to be done? Because they haven't gone through the trials and tribulations of failure of, understanding how traditional business works. And so, that's why a lot of those fail. But there's, we have the success bias, right? Because the companies that we end up working with tend to be things that are going in the right direction. But yeah, like on the one hand, I say, it would be great to have, founders who have, 5 to 10 years of experience, have gone through this and struggled and figured it out. But in this industry, it just doesn't exist, right? So you have guys who have very strong technical backgrounds in things because they're coming out of university and they know other people who have been through this process. And so they've learned about it in somewhat an academic fashion. And then just through kind of hearsay of things, and it's developed a concept around it. And because of that technical, background, they're able to be successful. And so, that team can, albeit very young, can still be, do very well in this space. We see it quite often. This industry is very much focused on the younger guys, and understanding kind of, hey, look, we understand traditional finance. Again, I bring up, gaming is a perfect example. Those kids have been playing games forever.
Yeah.
Right. Yeah. And so they understand that very well. And so they know that, hey, this is why I'm pissed every time there's a blockchain game that comes out. I mean, I can talk to my son all day long about it. He's like, Dad, no one wants to do this. I was talking to someone on the Discord channel, that blah, blah, blah. And I'm like, we'll get there. All right. You will, once you realize there's actual value here, you're going to say, how did this exist without it? Right. But yeah, like I think this is certainly skewed towards the younger demographic. What ends up happening, right, as we all kind of see, especially even older traditional startups, is that you have these projects, they start up, and then I don't want to use this terminology, but I'm going to anyway. But you get the adults in the room that come in later who understand the more corporate stuff that everyone hates to have to deal with, but you need it. To the point of like the things that we're talking about, like setting up the right entities and the right tax stuff and all that kind of stuff. Traditional finance, like you get a CFO or a real COO, stuff like that. Guys who know how to take the business to the next level. You get guys like that come in, but certainly the team influence or the team focus at the early stages is still incredibly important. And having guys who at least have the ability to have that vision at that point in time, no matter what age they are, is certainly one of the most important things.
It's interesting. We always said, like, you have builders, sustainers, and evolvers, and for every phase there is someone. And we, one of the things that we always did, and also ask our clients very often, is like, what are you? And then sometimes they come to that perspective. They're like, yeah, well, actually, I'm very good at evolving. I'm like, okay, well, that's great, but you're doing a greenfield project right now. You need to build. That means flexibility. That means craziness. Like, are you ready for this?
That's right.
And that's where the cracks sometimes start. But it is a really good question, I think, to ask yourself as a founder as well. It's like, if you come from corporate, you may be really good at sustaining or evolving, but not necessarily good at the flexibility of a builder. And piece of person, right? You Series A, do you really need that builder startup mindset? Maybe you need somebody who is better at sustaining and a piece of evolving, and that builder piece gets, a lot less percentage in making the right decisions because it's less relevant.
That's exactly right. Yeah, being able to transition to the next phase is a key point there. So I agree with you 100%.
Nice. So if you don't have that kind of history, what do you suggest they do on the tech?
If you don't have that type of history, I think this is where kind of partners come into play, right? And saying that you have the right network and relationships that you can lean on for a lot of this stuff is important, right? It's not expected that you would have the necessary like years of experience, but you want to make sure that whatever you're focusing in on, right, from an industry perspective and a use case perspective, you have the knowledge of, right? Otherwise you wouldn't be building this. And then that you are positioned with the right partners or advisors, right, which are very key, that you can lean on to help with some of the other aspects that where you're not like you may understand the use case, but there's other things that need to be considered that you have the ability to lean on anytime you can. So, yeah, if I'm putting a deck together and I'm straight out of college, or I'm just young in general in the space, and I'm investing in you, I want to know that you have the right network of folks that you can lean on. I'm obviously like if I'm a seasoned investor and I know the space, then I'm going to bring my network to you as well to the extent I can. But candidly, at very early stages, some of these, you're going for angel investors, smaller investors. You're not everyone's going to get that A16Z, investment right up front, And so if you're getting some of the smaller guys, they're going to care about, your ability to have the right knowledge base up front. So if you don't have it, making sure that you surround yourself with the right folks that do, are certainly something that I would care about if I'm looking at that deck.
Brilliant. All right, so question 10, exit preparations. So for startups looking to eventually sell or go public, are there any strategies you would recommend to ensure their valuation reflects their true potential? Any guardianship moves that they should make?
Yeah, so the Web3 space is a little bit different, right? We don't have traditional exits for the most part, right? Not everyone is going to be like, I'll just use Coinbase as an example, where you're going to try to go public and, that's kind of the success story. And then, there's other things that relate to that. But for the most part, most of these Web3 companies, the exit it's a little bit different. Usually it's centered around a token, and the token in of itself represents kind of the liquidity around the exit strategy. And so if that's the case and you're building something around that, then making sure that the tokenomics associated with your specific asset that you'll be distributing, you want to make sure you've thought through that process, right? Because there are a ton of tokens that go out there and just there's no liquidity at the end of the day. Like if I move my 100,000 tokens, it would effectively destroy the market, right? So in planning for stuff like that, you want to make sure that you understand how the market kind of would adopt and understand and move with this specific token at the end of the day. And that's incredibly hard to do that. But understanding that type of concept to the best that you can by looking at other market comps, again, is probably a good point to start with. Like if you want to be the next Solana, right, at the end of the day, let's follow their journey and let's see how they've moved through that process. How did they issue their tokens? What did their allocation look like at the end of the day? How was that structure built, right? Because now that company is, you've got a whole network of people who are building on top of that. Is that something that I would like to do, right? Do I see like other partners coming in and building on my use case and utilizing that? And so then there's a revenue model associated with that relationship. Making sure you've thought through that process, right, is incredibly important when you start thinking about an exit strategy, because it is rare to see, an IPO. We are starting to see kind of acquisitions out there a little bit, but it's still, in its infancy for, companies with tokens, right? We'll see stuff like, infrastructure projects or like maybe some exchanges out there or something that's almost like more traditional to Web2 companies that have, a Web3 kind of focus. But for the most part, a lot of these companies, the value, the expectation is really sitting around how like the token will operate outside in the network. So, those are things that you probably want to think about at the end of the day.
So now we get to the next section, the brainstorm component. And here we've picked some really interesting topics, specifically centered around strategies for maximizing your startup valuation. Conversation I honestly wish I had access to yourself, Neil, when I was running my first AI application and, again, working in the core teams of the startups I have. How important would you say is timing and effectively building a strong narrative?
Yeah. That might be the most important kind of aspect to this. I mean, timing, understanding that the market is moving in a certain direction and there's a market need for something, right? That is probably one of the most important factors, right? Like if I'm an investor and I'm looking at something, what's the demand for this, right? There's if there's already a ton of companies in a specific space, you better have some differentiation at the end of the day, right? Especially in the token world where there's a ton of tokens out there, there's a ton of noise. What's my hook, right? To why this makes a lot of sense. And so that narrative that you are crafting, if you will, is particularly important. Like understanding there's real like vision around something like this, where, if I'm going to be the next, chain link out there, right? Which, I love that particular company, what they put together around oracles and so forth. Like they've built an entire network and ecosystem around that. If I want to be the next version of that, just in a different capacity for maybe another industry, what's the story there, right? How do I get there? What are like the potential kind of, milestones that I need to meet, like technically, operationally, financially, all of those things that still come from the traditional world, but just spun a little bit differently in terms of how I have to look at it, right? And some of the things we talked about today, right? And
absolutely,
if there's stuff like that, I can't be talked about enough in terms of making sure you pitch the right story.
I mean, when you look at Chainlink's story, I mean, their followers were practically militant, right? Like they really
the Chainlink Marines,
community, and it was
for sure.
Like, I mean, I'm I'm tangential to that game of narrative and mainly positioning is where I'm coming from. The marketing end is the way that they positioned that business and then got people involved in that community was art, as far as I'm concerned.
100%.
And the motivational factors around, like, who are we, what are we trying to do, and how clearly and well that was communicated was excellent. Absolutely excellent.
They did a fantastic, and still do a fantastic job of like educating the community on the particular use cases. When they have different products that they're coming out there, they inform the community to the nth degree about, why this makes sense, how you would utilize it, what partners that it makes sense to collaborate with. Those guys do a phenomenal job. And, just full disclosure, they are a client of ours and I've known them for, several years now. And I still remember when we started with them, it's like, well, what is this again? Like, what? Really? Okay.
You're going to do this.
Right. We can do this. And they're like, we were talking about the value of the link token at that time and, their tokenomics and, how that works. And, hey, this could be something worth something that's huge, but, they thought that through in terms of their allocation at a very early stage, that, in terms of what went to different folks in the community, investors, and, the founders, all those guys, because they wanted to make sure that, this thing is something that people are going to hold and utilize throughout the network, right? Not just something that people are going to take and just exit immediately off of. So they built their lockup strategy knowing that, and here they are today. And I love what they put together. So I'm right there with you on that one. That's big fans.
Do you feel that their strategic appeal, obviously product timing, they nailed that. But it was an idea at the inception, right? It was like what do you think was the, I guess, the inflection point or the lever that was like, okay, I get this, we're going to run with it?
Yeah, I think for them, those guys, I mean, you got some crazy like intelligence that's sitting in that brain power that's there. It's incredible. And so not to say that, you have to have a PhD to do this, but I think those guys, with that combined with some of the more strategic guys within the organization, they saw the long game here, right? They believed that, the concept around the oracles and where the current market was with the blockchain technology at that time, and was in its infancy, they had the ability to say, okay, well, here's where it's headed, right? But the concept, or again, around building an ecosystem, right? And once they figure out that they're going to build an ecosystem, we've seen this in the past, like there's like the SaaS concept, right? Building a platform, right? The Salesforces of the world, if you will, like where I'm going to build a platform and people are going to come to this, and like once they centered around that idea, that the light kind of comes on, right? And it's understanding that inflection point of where you realize that this isn't like a couple $1 million project. This is $1 billion, multi-billion dollar concept where people can come in and build and develop on that platform. And I think that was like a key point for them, like understanding that the end game here, it's not even really an end game. It's just the long-term strategy of building out an ecosystem that everyone can be a part of is something that I think is got a defining moment for those guys at the end of the day.
Oh, excellent. So in general, I mean, Chainlink side, how do you feel like crafting compelling story works from the valuation side? Is that something which motivates you?
Yeah, I would agree with that kind of concept, like the crafting of the story and the narrative. Just kind of the former banker in me would suggest like that is almost the most important thing, right? Like when you put together, and coming from, especially on your side, Charlie, with the marketing kind of concept and positioning, like that focus needs to be crystal clear. I think for folks when they're investing in something, or you're looking to sell your product out to the folks, they need to understand exactly what it is that they're signing up for at the end of the day. And so if that messaging isn't clear from the get-go, if it's something that's too esoteric to understand, which in Web3 can be, right? There's so much noise, right? That, like, well, I'm building this and it's going to do this and it's decentralized. And I throw out a bunch of buzzwords. It's like, you just like your head just knocks back and you're like, what that's where like the traditional folks in the industry are just like, no, thank you, because you're just trying to scam me. Yep. Right. So you have to make sure that I think it's just more important for Web3 companies to make sure that they do their best to clearly position and market the exact need for what they're trying to, solve, right? The question that they're trying to solve, right? I think that is so important, right? So as we're trying to build we're at a very nascent space, right? Right now. And we're trying to build that into something that is more, I think, better understood by the traditional world, right? As much as we want to be, counter to that, right? Because, the traditional stuff doesn't make any sense, right? But we still need certain, components of that. And, if you're going to develop market share, you have to convince, the non-believers at the end of the day that it makes sense for them to kind of come on over and utilize this technology. And I think, you'll see that like in the decentralized finance we talked about. I think gaming will come around. I think, you're seeing the social network part of it come into play, which seems like a very logical thing. Like, why should LinkedIn and Facebook own all my information, right? Why can't I do it? Mm-hmm. The creator space, all of that stuff where, there is a use case for me to develop a whole kind of business around myself, right? If I can, sign up for the right companies who understand that are building those ecosystems, I'm far more compelled to be interested in them than if it's just a bunch of buzzwords. So,
but this is interesting actually, because if we're looking at, looking over the decks and the compelling narratives that we've seen coming by, I often fail to see, they're good compelling narratives for Web3 investors or bigger Web2 VCs that have a, at least a crypto division that understand it. But very often it is the buzzwords, and everything that I was like, why there's not the focus on the mass adoption Web2 piece, which I think is very important, right? Like I always make that example is like, my mom, everybody's mom, they need to use it. These are the people that you wanted to use, right? Let's say decentralized.
Add the word NAI to your pitch deck, and
yes, exactly. No, but that's the point, right? You throw in AI, you throw in LLMs, you throw in blockchain. I'm pretty sure my mom looks at it and she's like, "What is an LLM? Yeah, I heard AI. Yeah, and why? And why do I need this?" And I think a very what is so important in I think a compelling story, what I sometimes miss is, okay, this is all great. This sounds super great for the crypto community. You probably onboard them one-to-one. Let's go. What about the rest of Web2? What about your end users that really going to make your product bigger? Yeah. We didn't really think about it. That's not a narrative. And I'm wondering lately more and more, because we're moving towards, everybody wants to move to the mass adoption space, why we're not touching that point. Creator economy is the same thing. It's like, oh yeah, we're building like the next big Tumblr or whatever. It's like, okay, great. How are you going to onboard these users? Yeah, no, we have all these Web3 users. Okay, that's great. We're not talking about Web3. Your real technology, like the technology you're really going to use and is going to be used, is Web2, mass adoption. Where is that compelling story to those folks, right? And I'm always curious, like, are you looking at that from a valuation standpoint as well? Because I think a lot of these things are by crypto, for crypto, right?
100%, because that's where like user growth and adoption comes from, right? If I'm going to really grow this, I can't rely on just this sliver of an ecosystem to move the needle for me, right? And especially if it's something like you just talked about, like, the creator space or, other spaces where you actually need to leverage, the broader community at the end of the day, because they're the ones that are going to drive it, right? I'd rather, get that percentage of that network to validate, right, this concept at the end of the day. And so it is tremendously important. It's part of the assumptions, right? Candidly, when you're looking at some of these things where, that adoption, that mass adoption is critical.
And that's the point also with me for gaming, that I'm always like, okay, I understand the narrative, but there's no such thing as a Web3 gamer. There's gamers. No. And that's what everybody gets wrong. It's like, oh no, we got to onboard all the Web3 gamers. Yeah, there's no Web3 gamer. Your Web2 gamer is already done with microtransactions, so you better make it make sense, right?
That's right, 100%.
So I just wanted to talk about key performance indicators. Now, KPIs. I mean, I have tried to slide this question into every pod we've had, and VCs are like, well, it's Web3. So, I mean, we all know traditional Web2, we all know, I don't think that's fair, but in Web2, it's very much how much money you're making and how much is that money, the end, right? Like, is the machine you've built generating capital? Has it got future potential? Am I willing to take the bet on the future potential? And are you, and then you start to get into the realms of an Amazon play, which is, we're not going to make money forever until we make a lot of money.
Yeah.
And at that point, you kind of have to be really, really good.
Right. And how many are left standing after that, right? Yeah.
Exactly.
And what's interesting with this space is a lot, like, okay, you have that interim tranche of I can form a token and like facilitate a liquidity event early.
Yeah.
Which changes or even flips the timeline on its head. You've also got shout out to Sebastian Spitzer for this phraseology, but you've also, especially at the beginning, or if something specifically is quite hot, the founders giving terms to the VCs about whether or not they can come in on their token.
Yeah.
And that kind of stuff is happening. So I feel like it's really changed the game for KPIs.
Yeah, for sure. Right. We don't have the traditional KPIs, and we touched on it a little bit before, right? In terms of, how these networks work, the concept around the value locked in the token, the TVL. Those are all kind of ideas around it. But honestly, it's really centered around, and we just talked about it now, but that the user growth and retention around the tokens in of itself, right? If again, leaving out the companies that are in the space that don't have a token for a second, But if you do have a token, right, you need to build up that retention of the token. You need to compel people to want to hold that token. And so, that's why the restaking and liquidity kind of world is starting to take hold, because you have this whole kind of financial sector that is, sitting alongside the traditional financial sector, like, what hedge funds do and all those guys. Now we have moved this out into the token world, and where people actually can make real returns by, leveraging and creating, more complex like derivatives on these tokens. So there's access to that, and there's rewards associated with that. And so, having, again, if I bring up something like an Eigenlayer or Athena, I mean, you'll look at, they've got billions of dollars kind of locked in there where people have put money in, and, they have the ability to pull out and just and make distributions on that, but they can also make a good amount or a decent return if they leverage their positions in there. And leverage is scary still at the end of the day. Like we know, we've seen things happen in the traditional
How political of you, Neil.
So I don't want to say that, buyer beware, but still, all we're doing here though is we're taking just kind of traditional finance and moving it out into, this decentralized concept and earning rewards or tokens through staking or other types of mechanisms. Creates a value proposition, right? Which is something that has really been owned by, traditional finance folks, right? The wealth managers and the hedge funds of the world, right, have lived in that world. And now this is, something where, the broader community has access to. And it's because it's trackable, right? Everything is on the chain, right? So you can see what's going on and who's moving what. So you have a little bit more visibility in things. Those are some of the, kind of ideas around metrics and, thoughts. It's not, KPIs are probably not the best way to kind of characterize it, but I think there are still metrics that, we look at. So, again, TVL, maybe staking revenue, user growth and retention, which is really the fundamental key here, right? At the end of the day, like I mentioned before, just understanding how that works. And then, transaction volume and velocity will follow right on that. I think, those are areas that we really try to focus in on when you're trying to understand how a token could potentially kind of work out there in the market.
Yeah, definitely. So I think this last point is quite interesting because we're talking like low valuations, and there's always that trap of like, okay, I'm going to value my business as high as possible so I can get as much of a raise as I can on the first round.
Yeah.
And then you stutter step or really struggle with the second round because you've overvalued your business. And I mean, that advice has been there since Web2. That's not new. But when you're looking at Web3, you're like, the valuations were large, especially last bull. I mean, big valuations for ideas, right? Like, I think there was a time when you could raise on the back of a napkin kind of thing.
Yep.
How do you deal with an overly ambitious valuation?
I mean, you hit the nail on the head in the sense that, these are things that have been dealt with in the traditional financial markets for years, right? Startup goes and, the market's hot. We saw it with SaaS companies, right? Very early on, right? Everything was going to be the next big thing, right? And then, the market kind of tanks a bit, and all these guys are left kind of, now what do I do? Because, they overhired, right? And overspent on certain things. And now they're clawing to the next round. They don't want to take a down round, but, it's something that they, if they can hold out until the next market kind of movement, is that something that happens here? In the Web3 space, certainly similarities in that where, you hope that what you've raised is enough to manage your way through. Now, it's a little bit different in terms of, the rounds themselves, because, typically the way they come in is it's either call it like a safe with like a token warrant, or, we don't see, but you see them, but the priced round concept doesn't matter as much, right? Because if my liquidity is really focused around the token, you know, I mean, you can say there's valuation caps associated with safes, and what do they really mean? I'm not really sure, because that's just kind of a benchmark that's thrown out there for the most part. It's not a true price around. That's why you put together like convertible notes or safes in general. And the positioning around when I take more money in, you're not as concerned around, ownership structure there, because if the end game for a lot of these folks is centered around token allocation, then, my end game is something that I really still want to focus in on, making sure that, my market and use case is still on point, right? And that even though the market in of itself may have dipped a bit for this particular, sector at the moment, at the end of the day, what we're putting together, when, everything kind of fleshes itself out, it's still going to make a lot of sense. And so the token is going to have value, because that's what a lot of these guys care about. They take the equity position because they want their allocation of the token, and there's going to be liquidity around that. So you want to make sure that you're still building in the right kind of use case, where at the end of the day, if you can build value around the token in of itself, then everybody wins, right? And it's still a long game, because there's lockups that these investors will have, right? In the early days, didn't have any lockups. That's why we had the pump and dump scheme. But now we have lockups associated with where they can't just unload everything at once, and it can go out and follow almost traditional kind of vesting for equity, right? Where, there's a 1-year cliff, and then ratably after that for a couple of years. So people are compelled to hold their positions and utilize the network and build upon that. So even if, the markets kind of go south a bit and people have to worry about, call it, flat or down rounds, it's not really the end of the world, in my opinion, at least for the Web3 space, because if the fundamental goal is around, the token in of itself and building out a network that has real utility and value, then, that is going to work itself out over time. And that risk hasn't changed, right? That's still going to be the same risk that they had early on, because you always have a risk around the token, like user growth and retention, like we talked about, all of that. At the end of the day, people still know the expectation there. And so even though you may feel like you're taking a flat or a down round, you still have the ability to right the ship there, as long as you stay focused on the ultimate use case and make sure that the market still believes that that's the case, right, for that particular token, right? That is the thing that you have to really focus in on. But that's the underlying assumption here, that if I'm trying to build the next chain link or something, akin to that, that my market positioning around that is still solid. But, reassessing that is always something it's good to do anyway.
Nice. I think that's it for the brainstorming, Thomas. Anything for yourself?
No.
He just wants to go back to the beach, doesn't he? He's just like, I'm good. Margarita, just 5 minutes, 5 minutes.
yeah. I'm just like, no, don't come in yet. Don't come in yet. There's all these dancers, no, I think this is great. And this is, Charlie said it earlier. It's like, I wish I knew you earlier, Neil. And then Charlie comes from the finance space. I don't. So these kind of things, and once again, clients that we work with in the tech space, we had similar conversations, and they're asking, okay, what do we need to do with this? I'm like, well, I'm the wrong guy to ask, because I'm just doing tech. So, you need Neil as a friend. you need some Teknos. That should be probably the answer.
So, and finally, engaging effectively with valuation firms. Again, this is the guy that rates how good your painting is, right? Like how much
this should be your best friend.
Working on. Yeah, you don't want to piss this guy off.
Send him flowers,
Yeah. An example of how not to do this is Grant Cardone on the Undercover Billionaire. That episode where he flips off the business valuator is definitely not the way to do this. But how should someone approach Teknos? How should what should you have ready? Like, what documents do you need to have?
Yeah. So, we help people across different areas of development, right, in terms of the stage of their project.
Mm-hmm.
But for the most part, if you are going to launch a token, if that's in your kind of purview, getting in front of us as soon as possible makes a lot of sense for a couple of reasons. One, a lot of the work that we do is centered around the distribution of tokens and token rights. Either before you've raised money or even when you're raising money. We talked a little about safe and token warrants, that kind of thing. Making sure that we get in front of you at that time so that we can talk you through potential issues around if you wait till later to make distributions and the valuation around your token in of itself. At early stages, it makes sense. And I talked about it a little bit where, the value of the token is very low at early stages, but, the expectation is going to be high. But at a very early stage, it's actually okay if it's low, because if I'm going to transfer that from a taxable perspective, certainly makes a lot of sense. If I'm going to look to raise as well, it's a great time to talk to us. We can certainly help out with an understanding around the value of this particular asset class that you're focusing in on based off the industry. A lot of times we'll work hand in hand with other consultants, and maybe more traditional investment banks that do have a focus in the space. If they want to do the capital raising part of it, we work with them around the valuation side of things, because we have a very strong network of folks, which includes not only banks and law firms and tax guys, but VCs and angel investors, right, who are also very keen on getting into the right projects. And so, if we can talk to folks early on, that certainly helps all parties involved in terms of what are the things that you would need. And we talked a little bit, again, it's making sure you have that story crafted, right? I don't expect the tokenomics to all be worked out, but again, those are folks that we can make introductions to who focus in on that world. So again, getting in front of us early helps out, because that way we can understand kind of the message and the narrative that you're putting together. The valuation side, the metrics, some of the things that we talked about are things that we can talk you through. And then you can tell you hey, listen, this is what we're seeing in the market here. Maybe you want to position yourself, this way versus another way. Again, so early stages makes a lot of sense. Even at later stages, when you've already had a couple of rounds of funding, that's when it gets a little bit more. And we talked about it. You've got adults in the room asking questions. That's where we help out a lot of folks. Could be the token's already live. You have to worry about, what's going on with the liquidity around my token. What does that mean for the value of the token if I were to move certain positions? If I'm going to do a strategic deal with someone and tokens are a part of it, or I'm spinning out IP to someone, or it's something even at a higher level that's more corporate where, you might actually need something like a fairness opinion where, venture firms may need it because they have things that are going across funds. There may be things where you're exchanging equity and tokens with related parties. There's conflicts of interest. There's still that fiduciary kind of responsibility that I think people kind of forget about just because they think, oh, this is Web3, these are tokens, whatever. Yeah. But the ownership of something is certainly important. So, those are all ways that we work with our clients across the spectrum, if you will, of development and ecosystems in this space. So, that's how we would engage with folks.
Well, I mean, that's what you do. How do people get in touch? Is it, Neil, please help?
They usually just throw a big kind of sign out front. No, I think
standing your lawn.
Yeah, the most direct way typically is my email address or the company's email address, which quite simply is just info@teknosassociates.com. And then, my Telegram handle is at NKT underscore Teknos. So, those are two of the best ways to get in touch with us. I know it's a little bit more traditional on the email side, but again, we're the boring kind of finance guys. So we still work in an ecosystem where, the people that we have to deal with on the partner side still have to have that line of communication, if you will. But we'll move to something that's more smart contract driven later.
Hey, I mean, we wear the shirts. We wear the shirts for a reason.
That's right. There is a collar here, right? There used to be a tie.
Yeah, there's no tie now. What's this?
No, it's casual, right?
Casual.
Guys, give this space 5 years, and you'll look all like me. So don't worry about it. Like,
dude, when we go to the conferences, it's hysterical. People can spot someone who is not like a builder, like right off the bat. As soon as they see the collar, they're like, all right, well, that guy's either a VC, either a lawyer, or a banker. Period.
Or they're looking,
which I'm fine with.
They're looking for the Patagonia wife beater.
Yeah, that's right. Yes. I need the Patagonia. Done. VC.
This is my favorite part of one of my favorite parts of the episode, which is always the Desert Island Essentials. So this is if you were to rewind and let's say if you were a mini Neil starting off at the beginning of your journey, and if you were going to give advice to the younger self, and you were looking at starting a startup, what would be from the financial, from the valuation, from the forward planning side? What if you have no money, no bags, no black book, no connections whatsoever? What are the 5 things that you would recommend to yourself to accelerate that journey?
Well, yeah, I think the first thing is educate myself, right? It's read. I mean, there are so many accesses to information out there, which I wish, like, if the access to knowledge that we have now is so crazy, now to the point where it's fed directly to us, which is a little bit scary. But, if I had the ability to just go back and say, okay, let's start this from scratch, getting access to the right people in the space and through, the literature that's out there, would be one of those important things. Right. So there's some books these days that are that apply to the space that have been written by folks that are fairly knowledgeable. And, something that's recent is the book by Chris Dixon. And that I think is, very powerful. You've kind of probably seen the promotion around it. And A16 is very well known in space, but Read Write Web, those guys have spent a lot of time focusing in on that, and I think that's a good read. There's also some more kind of technical stuff. Mastering the Blockchain by Imran Bashir is a great book as well. I think educating yourselves both on the business side and on the technical side, in terms of understanding what is the blockchain? What does decentralized mean, right? Like, let's start from scratch here. I know nothing. How do I educate myself to really understand kind of what it is out there that, there could be potential opportunities on? And then, between those two, right, you've armed yourself a lot with kind of the potential here of, now I can start thinking about, where's there a particular demand here in the space. Let me look at, if I could look at, some of the existing technologies and, how would I might be able to fit something into that? And then, it has to combine with actually cliche again, but my actual interest and passion, right? Like, if I am a gamer, right, and I start reading about all of this stuff, does this make sense? Is this something that I would want to devote my time to and put my passion towards? Because once you turn your passion into a job, you're always a little bit scared to do that, but you better love what you do in that perspective. And I think that's a concept that, I don't know, again, dating myself, but coming back from where hey, we're just almost programmed, got to go into finance, management consulting, something like that. Now it's people really have the opportunity to kind of apply the things that they have passions about, right, to their everyday life from a work perspective. And I think that's what this technology kind of allows us to do at some level, right? It's trying to, once people get their head around it, right? Especially like from the creator perspective, we talked a little bit about that, but the creator perspective of, I can be an artist at some level and I can actually make a living doing that. And I can utilize this technology to do that, is really powerful, right? Whereas it's been like that world has been so closed off and owned by certain types of, commercial folks that, getting access to that has changed. Now, I mean, I own that, right? And if I understand how it works through, education, through some of this stuff, then I'm armed with the ability to put together an offering, if you will, around a product suite or a service or, my particular passion, if you will. So those are some of the things that I think about if I was really going to take myself back outside of, buy Bitcoin in 2010.
The thing shoulda, woulda, coulda.
I tell you, I mean, if I think about the companies that we've worked with, like, the things that I could have known and been a part of at that time, I may not be having the same conversation with you.
You would be sitting on a Caribbean island somewhere.
For sure. For sure.
Okay, number 3, I believe, Web3 community engagement and governance.
Yes, that's actually that's a really solid one as well. I think the like I said before, the community is particularly important in this environment, right? Web3 is all about building a strong community and getting them to engage, right? It's one thing to, have just a network, but you need people actually kind of working off of and believing the network and everything that you're trying to build there. So that community engagement is so important. And that read particularly, again, can't be talked about enough, because that's the underlying kind of concept between all of this, right? It's that network effect that we're talking about in terms of building out these types of companies. Like we all want in traditional, finance and business, right? It's all about, finding your market segment and all of that. But the Web3 community is meant to be more interactive, right? We're supposed to have a dialogue with, the people that we're putting this product and service around. And if I can engage in that, there's a lot that I can do. And yeah, I mean, you see that in the traditional world a little bit, right? And that's why kind of social media and the marketing around that has been far more successful, like in something like TikTok, right? The way that the conversion factors work, and that far more positive. And then if you, twist that a little bit into really what, a decentralized kind of Web3 protocol and network is trying to achieve, right? It's something very similar, right? It's that engagement that we're talking about. And if I can build that engagement in the community, that increases the value of the token and increases like the overall returns for everyone, and that people are compelled to engage with this particular product and service because I'm going to be rewarded with these types of incentives, then you would vastly improve your ability to be successful as an organization. So certainly things that that level of engagement and community building and then obviously the governance side of it too, making sure that people are managing that properly, can't go overlooked in this process. And then some other things. This again, cliche, but you gotta have thick skin to do this. Honestly, because you're going to get hit in the face a lot with, you can't do this. This doesn't make any sense. We've seen this before. I said that, you should stay focused, but there's still trial and error here, right? you are going to fail multiple times, right? And it's just trying, okay, well, this didn't work, but let's try it this way, right? It's staying, the goal's still there, right? The defining moment is, it's going to come, but, just like any kind of engineer would, right? You have to trial and error all the way through it. So that you have to kind of work through all of that to make sure that, you stay focused on the end goal. So, that resilience and call it flexibility without, moving too far off, like the key kind of point of what you're trying to build is certainly important. And then the last side of it is, this is like the, again, boring finance part of me, but, there are a ton of resources on cap tables, term sheets, venture investing, a billion things out there. Like I would make sure I do my diligence on that part of it. Right. So when someone comes to you and says, hey, what is, pre post money, what does that mean for, someone putting X dollars in, what percentage of the company, what percentage of, in this instance, how does the allocation work on the token cap table, if you will, and also knowing that the token cap table doesn't necessarily mean I have ownership in the company. There are plenty of people who have tokens that aren't the investors in the organization. Understanding that relationship between the two, which are things that are pointed out in Chris's book, I believe, if I remember correctly. But understanding the financial aspects of this at that level are certainly important. So unless you've got something that is just so compelling that you don't have to worry about any of that stuff, I would highly recommend just the education around just almost like traditional investing. But these days, there's enough in terms of resources out there to educate yourself on both the traditional venture side as well as what the token allocation or the tokenomics, how they fit into traditional raise as well. So, if I could just, I guess, summing it all up, it's, looking at, taking a look at Chris's book, as well as, Imran's book, Mastering the Blockchain, engagement and community governance, certainly very important. Not being afraid to fail a little bit, that resilient mindset, and then as an education around venture term sheets and investing as it relates to the Web3 space. Those are kind of the areas I think I would focus in on.
And of course, buying Bitcoin early.
And build a time machine, first thing.
Buy Bitcoin.
Neil, I can't thank you enough for spending your time with us here today. The only thing I could ask is you could tell our audience where they can find you, how they can get in touch with Teknos, and where they can learn more.
Yeah, no, I appreciate it. This has been a real pleasure, guys. Thank you so much for the time. Coming directly at us through our website certainly makes a lot of sense. TeknosAssociates.com. You actually can find all of our emails and all of that stuff to contact us directly there. But for the sake of just providing one, info@TeknosAssociates.com. And then my Telegram is NKT_Teknos.
Thomas, you want to close us out?
Thank you for listening. If you make it this far, it was an amazing podcast. Neil, thank you very much for spending time with us today. We're happy to post this. Like and subscribe and repost, because we love to see our content on LinkedIn, on TikTok, on Twitter, because we know it's good. Thank you.
Thanks, guys.